Welcome to Money on Tap. Money on Tap, your personal finance headquarters, where we bring out the professionals' experience and some fun in what we call three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. That's what we do on this show. We look at all sides of the issues, and we bring a fully independent planning perspective to the table.
Welcome back. You're listening to Money on Tap. This is Ben Brayshaw, and I'm joined here once again with Dan Michelon. You can reach us at 855-226-8551. You can also email us at info@yourmoneyontap.com. For our frequent listeners, we're missing a voice this morning that I'm actually doing, which is Seth Cressman. Seth won't be with us today. He's actually going to be out for a number of weeks. We had some unfortunate news. Seth is last month had a diagnosis with some cancer, and he has had to take a leave of absence, short, hopefully lived, but he has undergone some surgery and so forth, and he is going to be in recovery for a little bit. Things look good. We just ask that, our listeners just pray for him. He would probably really appreciate that. It's an overwhelming experience, Dan, to discover that and to have a friend like Seth to have to bear into that.
We certainly miss him on the air and miss him here working with us and all the different ways he interacts with Brayshaw Financial and the critical role he plays here with us. But, as he said, he will be back, and recovery is hopefully not too far off. And please do join us and keep him in prayer.
Yeah, for sure. Well, today, as we kind of jump into our show, we have this huge war in front of us. We have a big piece of life that everyone's very, very concerned about, and how to invest around that, and how is this going to impact things from the everyday investments of technology to the blue chip stock world to even commodities and various holdings. And we're going to talk a little bit about that today, have a conversation that will help maybe gear your portfolio in thinking in some different manners, and how there's this kind of tertiary three-dimensional moving environment around war. And honestly, we've seen a lot of wars in our time through the stock market, and the stock market's still up since then. So there's a lot of things that may be something you ignore and maybe something that you might make some adjustments with. But before we do that, we're going to jump into Money in the News.
First up, we have an article here from Megan Henney on Fox Business talking about the much anticipated and for a long time coming here, the first Fed rate hike. So the Fed raises interest rate for the first time in 3 years, promises 6 more hikes as inflation soars. So what we've seen is that the Fed did ultimately raise interest rates by a quarter point. And the ongoing debate wasn't whether or not this would happen. It was a question of when, and whether it be that quarter point or half point raise, which we talked about pretty extensively in a prior show, and how that half point move has typically been not so great for the economy. Probably with a little bit of foresight, they went with that quarter point raise.
Yeah, I mean, everyone probably on every financial network was talking about how it's going to be a half a point. Going to be, right, Dan? I mean, every day it was a half a point issue across the board. And I've had a conversation with a couple of people, and I just felt like a half a point would be really an aggressive conversation day one, even without the war. I really felt like, with all the history about how we basically sent our economy into a recession with a half a point raise back in the early 2000s with that whole thing. We talked about that in the past. They had done a number of quarter point raises and then did a half a point raise. One of the points we made inside the inflationary issue is that, raising this quarter point doesn't actually really help them combat the inflationary environment that we're dealing with. It's not like things are just more expensive because they're more expensive. It's like we shut down factories across the globe. We don't have enough to build stuff now that we've turned the world back on. And honestly, it has nothing to do with anything other than supply and demand.
Yeah, we crammed a few $1 trillion into the economy too. So we had not too many goods to buy and plenty of money to buy it with. The effect is predictable, right? Yeah. But I think one of the things that I have seen in reading up and following the news is that it may have actually been the war itself that prevented that half point hike, because we saw the immediate shoot up in the gas prices with the whole oil thing. And we're going to dive into that as how this war has impacted oil prices. And we're all seeing that. The indication I get, or kind of reading between the lines, is that they might have been aiming for that half point, But with the outbreak of war and the effect that it's had, that the quarter point was the only move they could make.
I think they'd sealed the deal, but I'm not sure entirely. Like I had a conversation with my friend Pat. He's an investment gentleman, and a friend of mine. And anyways, we were chatting about it, and he was agreeing with me. I think they wanted to do the half point, but I think they felt they could raise the rates, and it's really not going to have any bearing on inflation. It's not going to have a huge setback in the economy right off the bat. But nibbling that off, that gives them more flexibility to lower rates, right? Just getting some rates up gives them the ability to ease again versus tighten. So they're tightening the economic situation by raising rates. But now that they've done that, they can actually ease back in. So if they can get some rate hikes in here and sneak them in, it gives them the ability to lower rates when they need to get the economy going again. So it's interesting. I don't know how much politics is behind that. If we slow it down and then we speed it up and
It was interesting to see what the effect on the market would be because, whenever this happens, there's obviously an instant reaction. And really, there wasn't much of one. And I'm not so sure if it was because such a modest move or because everyone had known it's coming for so long. And they've already talked about potentially 6 more this year.
6 more.
What's the first quarter really, what kind of impact should that have? But luckily, I think good for all of us is that it really didn't do much. So hopefully they stay the course, go through the increases they're scheduled with, and that's already kind of been priced into what's happening.
Well, look at what the market's done since that. I mean, the market's been very happy that it was only a quarter point.
Yeah.
Clearly a half a point was
Good
priced in
that.
perspective. And the war, I think you're dead on with that. Well, next up, we've got, Nancy Pelosi and her trading. Well, it's kind of interesting. So there's all this. I don't know that there's any debate. I mean, I think we all know that Congress is full of insider trading in the stock market, and they're not held accountable for it. So that being said, there's a gentleman in Wall Street Bets who is looking to launch on the MERJ exchange, basically an ETF or a mutual fund. I'm not sure what he was going to define it as, but an offering to track and follow the trades of our Congress and what they're doing.
Which is a great idea. I mean, they're clearly exposed to insider information, and there's been numerous cases where they've failed to disclose trades in a timely fashion, and virtually nothing happens over it. But, in looking at the article, Pelosi and her husband made 30 million investment trades last year, which is absolutely astounding. And you can't possibly think that there's not some kind of inside knowledge contributing to those kind of returns. I mean, it just has to be the case.
Well, considering how much money she's worth, as we were talking about before the show, it does not justified by their prior wealth for her entering Congress. So no matter how you do the math, I mean, that's a generous salary to begin with, but it's not that generous, even for $30 million. So, but Jamie Rogozinski, I think is how you pronounce it. He is the founder of Wall Street Bets, and he says it's time to share the wealth. I don't think he's too wrong. I just think it's funny because the money really speaks truth. That's kind of how I look at it. Like wherever the money is or what's going on. But here's people who are literally following these people making money. Now he's presenting this ETF or mutual fund to be launched, but people are already doing this.
Oh yeah,
and people are already making money following these.
Yeah, it's supposed to be publicly disclosed, and the information's out there that these investments these folks make. But you always wonder, number one, what's the lag on that? How long after the trade do they need to report it, and have you already missed the market? Number two, we already know for sure that they're pretty terrible at actually disclosing this, and tons of them are always getting in trouble because they failed to do that. So whether or not this is a good investment product, I kind of tend to doubt it, but it's an interesting story anyway. And anytime I see Pelosi and Warren in the same article, I got to present it to Ben here, no matter what, because I know that's
my eyes are going to roll. Well, the fact that she's actually for closing this is shocking to me.
Yeah, actually, Warren is leading some legislation out there to actually prevent members of Congress and the Senate from investing in stocks and having to put all their investment money into a blind trust that they have no control over while they're in office, which is actually one of the few ideas I've heard come out of her that actually makes a ton of sense.
Does it have an exclusion if you're an American Indian? I don't know. We'll see. We'll have to check that. We'll check it and get back to you on that one. So lastly, we have here, Dan, I'm going to turn this over to you because you know more about this one, and I think it's very interesting. But Russia sets plan to steal $10 billion worth of foreign planes held in the country.
Yeah, this comes out of Fortune, and the author is Nicholas Gordon here, and this is one of the things relative to the sanctions and the war that I've been kind of following because it's just one of those stories that's it's almost comical the way it's gone down. But kind of the quick version of it here is in the series of sanctions that we levied against Russia and then the whole world did in unison, essentially. One of the kind of caveats of that, or one of the impacts is, well, Russian airlines, like every airline on the planet for the most part, leases their planes. You might not know that, but most airlines don't actually own the airplanes. They lease them. So when the sanctions came down, the Russian government, I'm presuming, instructed all of their airliners to fly back to Russia immediately so that they don't get repossessed, which was the action all these lessees were trying to do. And it ends up being that most of the planes are owned by a company out of Bermuda, which I have no idea where that connection comes from. But anyway, that's the story.
Well, that's where all those insurance and it is so much stuff in
offshore,
Bermuda. For such a small island, I mean, they got a lot of stuff going on.
They got a lot of planes. Everyone's got 3, And so anyway, $10 billion worth of these airliners made it back into Russian airspace before they could be repossessed. And Putin, being the guy that he is, immediately announced, or sometime soon after, that in response to the sanctions, well, basically, heck with it, we're going to keep the airplanes. We're going to nationalize them, and now these airlines
you can register these. Them. You can register these foreign planes in Russia, and we're going to strip it for parts.
You're stealing our yachts, we'll take your planes, and so a little quid pro quo there. But the interesting part in the article, as you dive deeper into it, is that, and this is stuff I would have no knowledge of before this, but for these airliners, there's a record keeping that's done with the maintenance and the repairs, and if there's any lapse in those records and the certifications of maintenance and repair, the planes essentially become worthless. Nobody will insure them going forward. And the fact of the matter is, with the sanctions, Russia is also not going to be able to acquire any kind of parts for maintenance. So they have these planes, they essentially own them now, but they're not worth anywhere near the $10 billion that they were when they nationalized them. And going forward, there's going to be no means to repair them whatsoever. So, one of these kind of terrible side effects of the sanctions is, you might be seeing these airliners falling out of the sky all over Russia soon enough, because they literally can't be kept or upkept with. And the spare parts and whatever's required to keep an airliner flying, they have virtually no access to that at this point.
Well, I think the conversation's even bigger than the airlines. I mean, this is, as we gather these articles, we start talking about them beforehand, and we're like, oh, we should have recorded that, put that on air. But, I think the thing is that, McDonald's has pulled out. There's a lot of these companies who have just said, hey, listen, we're done working with Russia right now. This is our sanction in cooperation with everyone else. And I mean, they're nationalizing everything. I mean, Boeing's pulled out,
virtually everybody. And that's, so Russia's response to that is, as you mentioned, they're going to nationalize it. So, okay, we'll take your factories and we'll run them. But the truth of it is that, unless that factory produced goods that were sourced entirely within the, geographic restraints of Russia itself, they won't be able to produce the same product. They won't be able to pay their employees the same wages. The quality is going to go down, and for
the quarter pounder doesn't sound like it's going to be a quarter pounder anymore.
No, did you see what McDonald's actually turned the logo sideways and made it a B, and now that's what they're doing at McDonald's. So I mean, it's going to be a whole knockoff economy of second-rate products, and my wife grew up in Eastern Europe, with kind of the fringes of the Iron Curtain, so she's very used to Soviet caliber goods, and it is pure garbage.
Yeah. Yeah, I don't think I'm going to be getting a Big Mac in Russia with the special sauce anymore. That's going to be a questionable world.
The other one we were kind of joking about, in response to the sanctions, the Russians sanctioned us, of course, or some of the leadership there in America. And, as if they own bank accounts. Well, maybe they own bank accounts. Who knows what's really going on back there? But
you never know.
This tit for tat, but it's not quite the same thing.
Well, I mean, to sanction Biden and Kamala Harris, and who was the other person? Oh,
this press secretary.
Yeah, Jen, whatever her name is. Yeah, she's an idiot. I'm sorry. But anyways, all of that to sanction all their accounts. But you know what? I didn't see Hunter on the list.
No.
Yeah, I didn't see Hunter on the list. I mean,
he might actually have some money on
He might have money there. Well, that's going to do it for us with Money in the News. We're going to be right back. We're going to talk about war, investing, and all the things around it. You're listening to Money on Tap. You can reach us at 855-226-8551, or you can email us at info@yourmoneyontap.com. We'll be right back.
folks, it is so much fun for us to bring you Money on Tap. My name's Seth Cressman, and I am one of the hosts here at Money on Tap. I'm also a financial planner. That's what we do. That's what Ben and I do. And the fun part is we get to have this radio show. We talk about important things that we think you need to listen to and be aware of to help raise the bar as far as your financial literacy. It's a big part of what we're trying to do here. The other thing that we're doing here as well, as financial planners, we are welcoming you to come and call us and to join us at Brayshaw Financial Group. Experience what complete wealth management looks like. Let's take a look at all sides of the issue, get a three-dimensional perspective, and put a plan around your next step. It's so critical, and so many people just leave this part out, and then they find out later, oh, if I only would have known. Hey, don't let that be your story. Give us a call at 855-226-8551 or info@yourmoneyontap.com. If you have $250,000 of investable assets today, our plan is free to you. We think it's important for you to know the facts and have a playbook so you can have a successful retirement. Give us a call at 855-226-8551. Thanks for listening.
Now back to Money on Tap with Ben and Dan.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw, joined here with Dan Michelon. We're going to start getting into our main show, but before that, if you need to get in touch with us, you can reach us at 855-226-8551. Again, that's 855-226-8551. Almost forgot the number there, Dan. You can also email us at info@yourmoneyontap.com because it's all about your money. Today, we're going to talk about war, investing, and we'll probably throw some politics in there. Sounds like a good mix, Dan.
Well, politics is war these days, isn't it? So
amen.
We're close
Amen
enough.
to that. You know, today there's a lot of stuff going on in the marketplace. There's a lot of people have called with fear. People that we don't even handle investments with, that they're just saying, hey, listen, I really want to talk to somebody about this. We hear you on the radio. We want to chat about it. That's been an interesting thing. If you have questions or you have concerns, give us a buzz. We're here. We're ready to help you. We want to see everyone do the best they possibly can. And right now, there's a lot of questions and concerns because there's parts of the marketplace are doing really, really well. And then there's parts of the marketplace that aren't. And I think that's the big fear because a lot of people own stuff that they're not really sure why it's dropping so rapidly and they're not sure why other things are growing rapidly.
Yeah, I mean, volatility in the market is just, a fact we live with every day these days, and it seems to get worse. And when you have these geopolitical massive situations unfolding like this, turbulence is going to come and there's going to be reaction to that. And as you said, some things will be affected negatively, some things will perform positively. But what's important to keep in mind is that, we have the back-tested history to this, and these types of things have happened before. Unfortunately, it's part of the world we're in. So there is some basis of foundation to look back and say, well, how does the market react to things like this? And we've pulled together a couple pieces and a couple sources that we thought were relevant for the show, and we wanted to bring that, as kind of an educational piece to hopefully quell some fears and, if not, at least provide some information to help you guys make good decisions financially going forward, given this reality in our world. And one of the things that I thought was pretty interesting is if you look back to history, and we found this piece here that talks about major geopolitical events going back to Pearl Harbor as an example. And it's talking about, included in here is the Cuban Missile Crisis, the Iranian hostage crisis, the first Gulf War, the second Gulf War, 9/11, the war in Afghanistan and our response to it. And what it shows is that if you look at all of those events in our history and you track the
major player in that.
Well, I mean, honestly, for a country that we'd barely heard of prior to this,
70% of their land is farms.
Yeah, I mean, now that we're all becoming aware of the fact that it's the breadbasket of the world, they have all these precious metals and minerals, this reliance on Ukraine.
By 3 months post-event, the market is returned 2% on average over all of those. 6 months out, it's 5.5 or 6%. And by 12 months on from the actual event, you're looking at returns of about 9%. So what this tells you is that, the market responds, it reacts, and you look at, I think I left out here, the average drawdown is about 5% total following these events. But what it does tell us is that the markets do rebound. They find their footing. People decide and determine, what effects this is going to have on our economy locally, and begin to invest, based upon, what the different event and the different impacts out there look like they're going to lead to in terms of returns and investment opportunities. And this, like all those other instances, creates situations that you might be mindful of and try to stay away from, but it also creates opportunities as well.
I would totally agree with the opportunity story. And I just, just looking at all the different, moving pieces, we've looked at China in the last few days. China's stocks were way down in the dump. They've skyrocketed it up. They've kind of recovered to their bad normal of where they're at because people are in fear of what China's going to do. There's all these kind of moving parts. But the thing is we've seen a lot of growth in the value space. The value space has held strong for the most part. There's a lot of flight to value. And, so some people are saying, wow, my value stocks are really holding true. Well, maybe it's time to liquidate some of those things and take opportunity where maybe things have been oversold. There's been a lot of tech stocks. I mean, I can name probably 20 off the top of my head, but I've seen a lot of tech stocks that I really, really like, where their PE, their price per earnings share, has dropped well below 35, even close to 20, which is a very low number. And I think, honestly, there's some real opportunity there to sell profits in one side and take advantage of the other side. And if you're long term, like you're talking about, Dan, you're talking about the S&P 500. Most of those those tech stocks you're going to find in some of those spaces. You might even be able to amplify that if that's the case. If the market, on average, through a crisis like this, is a pretty big opportunity. But a lot of people are afraid to sell the gains in a crisis mode like this and take losses. But in reality, you have to evaluate your portfolio and say, well, I have new circumstances now, and I need to evaluate where the money is and where I want to allocate it. And that's a hard thing to do, and probably harder if you're managing your own money, honestly. And it's for some people impossible. They buy a stock, they hold on to it, they don't know what to do with it and when to get rid of it and what the next investment should be, which mutual fund or ETF or where to go. But yeah, there's some major opportunities in there, and I think getting the gumph up to sell assets that are doing well and performing and have done, I mean, I've got sells in for lots of value holdings for specific numbers that I think are going to peak. They're not far off. They're 1 or 2% maybe above where they're at. And I'm looking to raise cash and redeploy those funds.
There's a kind of famous line that I heard Warren Buffett say, or it was in print, but he'd used it lately. And the quote's something to the effect of, you buy on the sound of the cannon and you sell at the sound of the bugle. So when war breaks out, you get invested, right? Because there's going to be that running away from the market, which creates that quick 5% dip on average that you can jump into. And for people who have been sitting in cash, when you look at two things, number one, the potential opportunity the war is creating and the turmoil there, and the fact that separate from the war, we're still looking at 8% inflation. Those two things will tell you, if you are an investor and looking for opportunities, that cash is just not where you want to be right now.
No, absolutely. I mean, if you're sitting on large quantities of cash, you should go back to our shows of where to invest, and just get that money moving forward, even if it's something better than the zero that you're getting at the bank. And maybe your zero is going to be 0.25% here now. But, at the end of the day, you're just going backwards, and trying to mitigate that loss is really, really important. But what a lot of people don't contextualize inside inflation is that, what my parents bought, they paid, $15,000 for their house 50 years ago or whatever, and they sold it for a lot of money later on, a big farmhouse, and we raised animals there and so forth. They sold it for a lot of money 40 years later, 50 years later. That being said, that's all because of inflation. I mean, they upgraded it and they did little stuff here and there, but there was no Taj Mahal here. It was it was the same house I grew up in. It just inflated with the environment. Stocks inflate too. People don't realize that, when Procter & Gamble is selling toothpaste and they have to raise their prices by 10%, well, now their revenue is going to go up across the board on their toothpaste by 10%. So now you have a new revenue base for the evaluation, and people start basing all these metrics on the value of their stocks. And honestly, inflation, the tailwind is going to inflate some of these stocks automatically just because of the revenue cycle.
There's some companies that can, and this is kind of one of the tips of the day probably to look for, is they can raise their prices as inflation affects the buyer.
Right.
So that cost that hurts us at the register does not affect them. They pass that through directly to you. And then some companies that can't do that. Goods can do that, services maybe can't. So it's just something to think about as you're analyzing a business or a company that you might want to get invested in a time of high inflation. Is, are they effectively able to pass that cost through to you versus is this a company that's out there trying to raise cash? Because that's going to be more expensive for them. That's going to hurt.
And I think that's one of the things. And we were talking about, just even moments ago before we got diving into the show, just the conversation around gas, right? I mean, oil spiked up to $130 a barrel, and last week, and we were actually really excited. We sold half of our energy holdings, and we were perfectly timed. I could never have thought that would have happened that well, but we sold half of that. It's pulled back significantly. I think there's going to be a double bump here. I think people are very excited to see it hit its all-time high and kind of get there again. And those 12-year dynamics of where oil was, and us too. We felt the same way. We did a sell, and if it pulls way back, we're really going to get back in again. But where it's at now, I'm just going to wait for the double bump, maybe pop out another half of what remains. But where did we go? But now oil's pulled back, and what's the gas pump done? Absolutely nothing.
Nothing.
It has not gone down. I mean, you had a 30% loss in the price per barrel of oil, and the price at the pump did not change.
It's amazing how that works. And there's another article I read today that
I know how it works. It's called capitalism.
Oh, gouging, one or the other, right? Is that the same thing? I'm not sure. But you talk about pass through of prices, right? When the barrel of oil goes up, the price at the pump goes up immediately. But when the price of the barrel recedes, not so dramatic an effect on the downside.
Let me tell you, that Suburban we have. It costs a lot of money to fill that puppy up. I'll tell you. My wife, she doesn't really think about the price of gas all the time. She's just filling it up, taking the kids to class and practice and this, that, and thing. And then she's astonished. Just tells me that we got a real problem here. So,
I got it the other way around. My commute's about a quarter mile. My wife drives 60 miles a day. So I hear about the tank all the time. I go a month without going to the gas station.
No matter what happens to you. So I think the thing about all of this is that there is just so much involved in oil and gas and all the and then to hear our government start talking about how we need to get really aggressive in the green energy, I'm thinking to myself, does anyone realize how much oil we're going to burn to create all that green energy? We're not there yet. And then on top of in the middle of an oil and gas crisis, let's go green. It sounds too ridiculous.
Yeah, and something to keep in mind on, jokes aside, is that the fact of the matter is Russia is a major producer of oil, and that's essentially going to be taken off of the market. So no matter what's going on here with this kind of recent downtrend in the price of crude, I think there's likely some manipulation going on there.
Okay, so this is where you're digging into a little politics for me, Dan. Because I think the Keystone Pipeline should be open. I think we need to drill in the federal lands. And honestly, when we were energy independent, we could be selling it to the nations over there, making them independent from Russia. And we wouldn't be worried about the crisis. Because basically, Europe can't say Russia, no way. I mean, that's the problem. They're like, yeah, we're going to ban your oil. In 2023.
Yeah.
Right? I mean, if we were energy independent and we were producers of oil globally, we could really put sanctions on Russia.
Yeah, we'd be in a much better place if we had the excess capacity to sell it.
Yeah. So, that's really interesting. But I do think we've referenced this show a few times. We should probably go back and re-listen to it. But we talked about, Iran and Russia and what they need to sell their oil, and Saudi Arabia and what price per barrel they were seeking. And it was just kind of interesting because we remember, and I don't have the exact numbers, but I remember at one point in time, it was say 42 for Iran. And it was lower for Russia at the time or something. But now you were just referencing an article you read.
It's their budget. The national budget this year was set at $57 a barrel, which.
Well, at $130 a barrel, That's pretty good budget.
Yeah, so now they're in a position to do well with that, other than the fact that they're spending billions of dollars a day launching missiles all over Eastern Europe. But that's kind of a separate matter. But what it does leave them in a position to do is offer a steep discount to what the market rate is and still sustain their economy off of that, which is what we're trying to prevent. Because we've already had countries like India say, yeah, we'll take that 30% discount. We'll buy that.
We'll buy that at $70 a barrel. Russia's still doing more than their budget was. I mean, they're not crying. They're like, okay, well, that's fine. Yeah, keep your sanctions in place. I think a lot of people don't really understand the dynamics of energy and how they play into our economy, how they play into the world global political environment, and what actually really puts the squeeze on. I mean, I think it's funny to see Nancy Pelosi and Joe Biden stand up there and say, yeah, we're not going to buy any more of your oil, Russia. I mean, they wouldn't say that if we actually bought their oil. I mean, that's the thing. Maybe a little natural gas or this, that, and the other thing, but we don't use Russian oil.
It's a zero impact for us. Our economies are not tied. We don't need anything that they do or make, but, parts of Europe do. I mean, Russia's got two things going for it. It's literally got the GDP of Costa Rica.
Yeah.
But they have nuclear weapons and they have energy.
Well, I think that's interesting because I was reading an article on Ukraine, and this is very interesting. Did you know that one of the major natural resources of Ukraine is uranium?
I did not.
I just like having those bizarre facts out there, Dan. So out of all Europe, I mean, it accounts for 1.8% of the world's uranium deposits. That's a big percentage of uranium. I mean, it's a major player in that.
Well, I mean, honestly, for a country that we'd barely heard of prior to this,
70% of their land is farms.
Yeah, I mean, now that we're all becoming aware of the fact that it's the breadbasket of the world, they have all these precious metals and minerals, this reliance on Ukraine that the whole world has to provide these natural resources and byproducts of the land. I would have had no idea going into this that it was really that important of a country for reasons other than the geopolitical, for the global supply.
Oil, natural gas, iron ore, manganese. I mean, the uranium's just really interesting to me because you've got this whole conversation with, the Iran and all the stuff going on there. It's just there's a lot of stuff happening. But like you just mentioned, it's the breadbasket of the world. I mean, 70% of the property is farmland. I kind of laughed when I read that statistic because I'm thinking to myself, it took Russia 22 days to even get near Kiev, and I'm like thinking to myself,
because they ran out of oil. Imagine that. That's not going well.
Yeah,
that is not going well.
Putin's not happy.
When the Russians run out of gas, that's not good.
But that's really very funny to me because I'm thinking to myself, you guys are trying to cross farmland. You're running out of oil trying to cross farmland. I mean, it's kind of, I mean, we joke around about this stuff. There's a lot of moving parts here. Ukraine is obviously much more of a political component than has ever been globally understood, right? And I've heard that between, and I don't have the statistical facts in front of me, Dan, but I heard that between Romania and Ukraine, that's like almost 30% of our wheat production and barley production worldwide.
Yeah.
I think it's kind of interesting. I was listening to the End Times show, Janet, whatever her name was, I can't remember. And she was talking about how in Revelations it talked about how there would be a wheat and barley shortage in the Bible. I thought that was interesting. I don't have the verse for that, but I thought that was really interesting. And it's just very bizarre that she's referencing that. And the world politics is just such a unique thing as you dig through the investment pieces of that. So what does that mean for people who want to invest? Are we all going out and buying wheat and barley commodities? I don't know. We'll be right back. You're listening to Money on Tap. You can reach us at 855-226-8551. Again, that's 855-226-8551. Or you can email us at info@yourmoneyontap.com. You have the interest in sitting down with us. It's a no-charge, free consultation. Go over your investments, talk about concerns and fears, and try to see if we can be of any help. We look forward to talking. We'll be right back. We'll talk a little bit more about war and investing.
Call us today at 855-226-8551 and get your free consultation with Ben Brayshaw or Seth Krussman or any one of our partners and find out what's going on in your plan, your estate plan, your financial plan, or what you're planning at all, if nothing. Get it fixed, get it right, Get it done today. Give us a call at 855-226-8551.
Now back to Money on Tap with Ben and Dan.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw, joined here again with Dan Mickelon. You can reach us at 855-226-8551, or you can email us at info@yourmoneyontap.com. We're talking about it's a battle out there, war, investing, all of those things. Those are the concerns on a lot of our investors' minds. It's probably a concern on your mind as you continue to listen through this. We're going to talk a little bit more about Ukraine, the investing, the kind of the geopolitical investing side of this, and maybe honestly how to invest. We finished talking a little bit about the natural resources of Ukraine. I think what's really interesting is that they provide such a large, plentiful demographic of those natural resources. We talked about iron ore, we talked about uranium, we talked about the wheat and the barley, but they have the minerals. They have tons of minerals. It's just a very interesting. It's a very balanced. From gold and iron ore. It's crazy how much stuff that Ukraine has. And I think knowing that that's potentially going to be under Russian rule if these sanctions don't work, watching people abandon the country and husbands and boys stay home to fight. It's horrific looking at that. But that's a huge loss for Europe. It's a huge loss for our world.
Yeah, it's obviously a humanitarian crisis on so many different levels, but the fact of the matter is there is a global dependency on a lot of things that are supplied out of there. So regardless of ultimately, which side wins, and in a lot of these cases, nobody does. It just ends in some kind of a stalemate. But the bottom line is, from the kind of investment perspective, is that those goods are simply not going to get out of there. They're not going to be produced. They're not going to be shipped. They're not going to be available. And so in some instances, we'll turn to other suppliers, and that's going to have an effect on supply and demand and price, which is what we focus on here. But in some instances, those things probably can't be readily replaced. And so there'll be, backlogs and deficiencies in supply. And not that we're not dealing with enough supply chain issues as it was, but, you can expect more of that ahead. There's a lot of different things that we're going to lead to market impact here. But the first one, and one of the moves we made in the portfolios, is to start taking a look at commodities, which has been relatively stagnant for about a good long decade. But, we saw that as a conflict-related opportunity, and we kind of made the move out of energy into that and just kind of responded to what's going on in the world in the most prudent way we thought possible. But those commodities are definitely something to take a look at, and specifically talking about the minerals, the metals, the farm produce.
Well, I think the thing is with Russia, taking control of a lot of this stuff, like even just with the planes we were talking about, Money in the News, and they don't really play nice, right? They're not a play nice kind of country. So that's a problem, and losing that kind of natural resource to Europe and to that area. It's interesting because one of the Ukrainian industries that they're known for is shipbuilding and transportation. Like it's right there. It's a big. So there's a large set of problems, I think, that we haven't really materialized into the entire global need of what's available. So I think it's going to put more demand on these natural resources from other countries that are mining and so forth, and that demand, whether it's for making the steel, whether it's look at our relationship issues with China, and that China and Russia are having conversations, and they're kind of doing things together, which is concerning to us because they're another big supplier for us. So we I think it was March 8th, we made a large movement. I think it was the 8th. We made a large movement out of energy at 50% or more. And then we sat in cash for about a week, and then we just picked up a number of commodity plays. So commodities had spiked, and then they had, before we could even get into them, and then we waited for a retreat, and we feel good about that. We think there's a long-term play. We've had a kind of a lost decade with commodities. It has been just a horrible investment opportunity, and we have been fortunate not to partake in that. So that's been interesting, but I really do think there's some real opportunity inside the commodity just because of the demand. I don't think Russia is going to be out of the Ukraine anytime soon. I mean, they're not in any fear. I mean, I read an article that they have enough gold on hand to live without selling anything internationally for over 2 years. I think it's just shocking to me that they have the ability to do that.
Yeah, I mean, the sanctions have had impact. I mean, you see in the news the barren aisles at the grocery store and empty shelves, and the hope is that the public there got so used to Western things that that they would revolt in some form or fashion, and get hysterical about the fact that they can't buy what they used to buy. And but the fact of the matter is that doesn't seem to be taking effect. So we can cripple their economy, and we have, and we will, but they will, likely sustain that and continue the fight. Yeah, so I don't see this being they're going to retreat anytime soon, and for good reason. We're not going to get militarily involved there. So this probably will be a prolonged stalemate of some kind.
Yeah, I would agree with that, and I think that they're going to probably hold these natural resources over Europe's head for them to have to go somewhere else at a more expensive price, and then competition for those things. And Russia's not going to be removed from our globe. I mean, it's an area, it's a very large area of our Earth, and just because we want to pretend to ignore that and move on, it's just not going to happen. And we're going to have to figure out how to find ways to move forward. And I think, sadly, I think the world's willing to put, the Ukraine somewhat on the chopping block for Russia, because otherwise they would take much more serious real measures. I mean, I think Biden would have opened up the pipeline. I think he would have allowed drilling on the land. Who said we're going to become an exporter immediately. We're going to do all these things. We're going to provide for Europe. We're going to shut Russia down. I don't see that happening. And so to me, that says we're going to sound the alarm, Ukraine. We're sad to see what's going on, but I don't think we're going to hold Russia really accountable and make it really feasible to shut them down.
Well, I mean, I hope and think we'll do what we can, but I think the effect of that's just limited because
I think the humanitarian
side,
I think we will. I think we'll be excellent on the humanitarian side. I think from the enforcement issues of Russia taking Ukraine, I mean, this to me smells like Germany and the Nazis all over again. I mean, I think Russia takes that. I think they take Romania. I think they take Poland. I mean, I really think that this is not something that's going to be done. And all of a sudden, you take Romania and Poland, we got a whole much bigger problem.
Well,
those
are NATO countries, so that's a different story.
Yeah.
Hopefully that's not the case. But that does lead into kind of the next opportunity in the investment side of things, and that's defense stocks.
Yeah.
Right. That's for sure something that is around the corner in the sense that we will be building a lot of missiles, a lot of planes, a lot of drones. So you will see a significant rearmament, not only for the U.S. military, most likely, but all of our partner countries in NATO there in Europe have all, from what I'm reading anyway, begun ordering and supplying. So that it's another opportunity to take a look at.
Absolutely.
This conflict is going to go on. And the truth of the matter is, even if it doesn't, all those countries are now coming to the realization that they need to defend themselves and get prepared. And, it's one of Trump's campaign issues was getting NATO to meet their 2 or 4% GDP commitment to defense spending, which prior to this, none of them had really even come close. There was some motion towards the target as Trump was kind of berating them into it. But I think you'll see that spending clip ramped up big time.
I think people are going to heed the warnings that were given. And, I think it was the personality of Trump that kept a lot of countries at bay because they just didn't know what he was capable of. But I think, Biden's the opportunity for people to say, I think I can take some steps and see how far they go. The problem is that with what Russia's doing, other countries are starting to see how far people are willing to go in today's world. And what does that mean? What is Iran going to do? What is China going to do? What are these psycho dictators capable of, in an unconcerning, world right now. I mean, everyone's concerned about things, but they're not concerned about actually taking action, not real action. And but that's what drives defense stocks, right? And I think that's really going to push it. I mean, we've seen a couple different things in movements. We've talked about that. So there's a lot of different areas to be looking at. But I think one of the things that a lot of people haven't really considered is from an investment side is cybersecurity. Now, cybersecurity's talked about a lot, and we have a big holding in cybersecurity. But I think people don't realize, one of the initial phases, right, of the attack on the Ukraine was the cybersecurity, right? They were going after their infrastructure. They were trying to hack all their power. Russia was completely going against their entire web of information and whatever you want to call it. The
and in response to other countries and this group of hackers, whoever they are, wherever they are, but they've been playing pretty good havoc with Russian systems as well.
Yeah.
And to the point that Russia's essentially tried to unplug from the internet, and they have the ability to do that supposedly. But cybersecurity is for real, and I can see that being one of the first responses, kind of when the dust settles, to all these sanctions. Is clearly they're willing to claw back whatever assets they can, and they feel like they've been stolen from, so they'll be more than happy to steal from you.
Yeah, and I'm thinking back about the pipeline. The colonial pipeline that was hacked here in the U.S.
Yeah.
Yeah. The issues around that and the vulnerability that you have inside that, if somebody's putting all of their resources to shut you down, they're gonna find holes, right? These guys are just randomly picking on one pipeline. They find a hole, they get in there and they do it. But it's like, can you imagine if you had your entire country being, professionals just going after it with a full onslaught? They don't have to hide themselves. They're like, yeah, our Russian hackers are going after you.
Yeah, our recourse to that would have been sanctions, and we've already thrown all the sanctions we got at them. So, going forward, one of the scary aspects of this is, short of actual conflict, there's not much else we can do to be punitive here.
Yeah. Well, you're listening to Money on Tap. We're going to be right back. We're talking about war and the battle inside your portfolio. You can reach us at 855-226-8551. Or you can email us at info@yourmoneyontap.com. You want to have a sit down with us and talk about your portfolio, your concerns, and where you're at, you're welcome to do that. We have a free consultation in that space, and we look forward to talking to you. We'll be right back. Stick with us.
On this Cliff Notes edition of Money on Tap, Ben and Dan discuss this recent headline.
And Money in the News from Megan Henney at Fox Business. Expecting a tax refund from the IRS? Here's how long it could take. So I think we've all been kind of hearing and reading that the IRS is prepping us for ongoing delays in their processing of business and getting taxes done, 2021 taxes, and the refund you're looking for in 2022. But what they're telling us already is kind of early guidance that even if you file online, which is what they're really trying to nudge everyone to do, expect at a minimum 21 days before you get that direct deposit.
It's funny that you say that, because I heard a statistic about the refunds for people were taking like 12 to 18 months on refunds. Like if you overpaid, they were still like over a year behind, which is scary.
Thanks for joining us for this Cliff Notes edition of Money on Tap, with great tips from the pros in three-dimensional investing, utilizing insurance, brokerage, and fee-based planning. Now here's more Money on Tap with Ben and Dan.
Welcome back. You're listening to Money on Tap. I'm Ben Brayshaw here with Dan Michelon. We're talking about war in your portfolio, the battle inside your investments. You can reach us at 855-226-8551, or you can email us at info@yourmoneyontap.com. We've been talking a lot about the Russian-Ukrainian conflict, the war that's going on over there, and investing in the portfolio. We kind of want to wrap this up over the next few minutes, talking a little bit about, kind of talking you through the concerns and fears that you might have looking at your portfolio. A lot of people manage their own money, something that we don't entirely recommend, but we try to really give some support where people feel that that's appropriate, and an offer to sit down with us and kind of talk through those concerns. There's a lot of things you can do. What I would say, and the one thing that we'd want to leave our listeners with today, and Dan and I feel pretty passionate about this, is don't sell anything out of fear. Anytime you're making a change in your portfolio, it should be out of intention. It should be out of straight, discerning, competent, advised intention. I would say that the majority of people who sell never get back in when the market's, horrible, because that's when you should get back in, right? I mean, I was listening to Mr. Wonderful, the guy on Shark Tank, he was talking about, he's like, it has to be the worst sounding news ever, and that's when I buy.
Right.
And I think that's what people don't do. They sell when they get scared, and they wait to feel better to buy, and then usually that's higher than when they sold.
That's selling low and buying high is exactly what that is. The market's an emotional thing because it's made up of emotional investors, but the best outcome typically would be for people who stay the course, right? You have your time horizon, you have the risk tolerance. When you set on your course of investments, if you adhere to those things and you're willing to, not exactly turn a blind eye, but just be prepared to weather the storm when certain situations come up like this, in the end, you'll be best off for it. And data supports that, as we talked about, looking at all these kind of seminal events and major geopolitical things. Just to run back through the numbers as we close out here, in the first day or two, you're looking at a 5% negative downturn. Typically, by 3 months in, that 5% has been returned. By 6 months in, you're positive 6%, and a year later, you're back up 9%. So, and then that's taken into account multiple events. So it's not one unique experience in our world.
Yeah. I think the biggest issue is you've got two competing issues. You've got the accumulation phase, which is your pre-retirement years, and your distribution phase. And for the people who are in distribution, if you're very scared of where you're at, that's something you should be sitting down with us on, because there are ways to mitigate those fears and deal with that and create guarantees and monitor that and create liquidity in different places for where you need it to deal with these things. Because statistically, it's the first 5 years of retirement that sets you off for the best opportunity for success or the worst failure. Those are the two options. And I would encourage people who haven't heard of it, or go to our website and look at the sequence of returns video. It's a very helpful, very kind of aware scenario of two different people investing at two different times with exactly the same money, and how that can completely change with the same exact investments. Only a couple years off, and it's super helpful for people to understand what's going on with the marketplace. But if you're in the accumulation phase, pre-retirement, history tells us, stay the course. That emotional movements will cause more harm if you don't know exactly what you're doing. We trade our portfolios, we move things, we know what we're doing. We're working through different processes to help find opportunities that we feel are successful. And we try to relinquish areas that we feel are going to potentially be unsuccessful in the short term. That, we believe, is the best way, as well as some level of passive investing. We've talked about this stuff in the past, but the truth is that if you just stay the course, you should be okay. We've had wars, we've had conflicts, we've had everything under the sun, and the market tells us 8 to 10% is a historical average over time. And you've just got to mitigate losses in the years that the market's down.
Yeah, there's certainly, kind of checkpoints along the way. You talked about that, pre-retirement planning and the day you enter retirement and those first 5 years after. Those require special attention. That's not the full stay the course thing. Those are times to probably, consider your next move. But particularly today, in the times of high inflation, that move probably isn't run to cash, right? That might be a reallocation. That might be a rebalancing. That might be a consideration of a guaranteed product or some other solution. But when inflation's at 8% like it is today, just dumping the portfolio 20% off its high and running to cash, you're just assuming a tremendous hit that if you're in that kind of nearing retirement phase, the chances of recovering that are not great.
And if you sell today and the market's down, and then 2 days later they have a ceasefire, Russia walks out of the country and says, we're not going to do this. We've had second thoughts. All of a sudden the market's going to recover pretty substantially, and you're not going to have time to get back in. And so there's concerns around that. So making intentional shifts to mitigate loss and to deal with that is a super healthy way of doing it versus kind of being reactionary. Being intentional with your investments, deciding where you want to put your money, and how you want to accomplish your retirement is really what's important. I think that does it for us today. You've been listening to Money on Tap. We look forward to talking with you. Give us a call, 855-226-8551. You can also email us at info@yourmoneyontap.com. I want to thank you for listening to us today, and you have a great week.
The views expressed are not necessarily the opinion of this radio station and should not be construed directly or indirectly as an offer to buy or sell any securities mentioned herein. Investing is subject to risks, including loss of principal invested. No strategy, product, material, or tool mentioned can assure a profit nor protect against loss. Please note that individual situations can vary. Therefore, the information, products, materials, or tools mentioned should be relied upon when coordinated with individual professional advice. Past performance is not a guarantee of future results. This show may be subsidized in whole or in part by a product sponsor or issuer. Securities and advisory services offered through SagePoint Financial Incorporated, member FINRA SIPC, and a registered investment advisor. All other services offered through Brayshaw Financial Group LLC are independent of SagePoint Financial. SagePoint Financial and Brayshaw Financial Group do not provide tax or legal advice. Main office is located at 116 South River Road, Bedford, New Hampshire, 03110, and can be reached at toll-free 855-226-8551.
Well, bye.